All right, Dave, welcome to the show, man. Good to talk to you.
Hey, very good to see you, mate. Thank you for having me.
Love hearing mate. That's always my favorite one to hear.
Yeah, it means I'm relaxed. We're a family team. I'm allowed to call you mate.
Good deal, good deal. Well, for those who aren't quite familiar with you yet, or you wouldn't be calling mate in person, can you give us a kind of a brief intro of yourself, brief background of how you got into Bitcoin, what you're doing now?
Sure, John. I was born and raised in Brisbane, Australia. Had always taken an interest in computing since a very young child. I spent my life growing up with computers, computer games. Was fortunate enough to be one of the first to be using dial-up modems, initially to connect to bulletin board services, and then ultimately to the internet in late 1994, early
Okay.
1995, long before a lot of other people were using the internet. I moved to
I always thought of you
Sydney
as a
after.
finance guy, not like a native computer geek. So that's interesting to hear. Cool.
The geek started from very young, and then the finance came later.
Yeah.
I moved to Sydney after high school to pursue an IT career, and then subsequently finished a degree full time whilst also working full time before moving to London in 2003. I think as a person in my early 20s, I was very quickly drawn to the attractive remuneration that hedge funds and investment banks were offering. And so, whilst working in a traditional IT role, I was actually self-studying materials on the most popular trading systems that I could
Mm.
somehow locate myself or persuade others to give me. There was nothing particularly special about this material. There was simply the system and operational manuals for the trading software that was being leveraged by hedge funds and investment banks at the time. And it was as a result of educating myself through these manuals and admittedly a little bit of luck, I actually secured a role in a small hedge fund in London. And from there, I progressed my career through a number of very large investment banks, ranging from trading system consultant positions through to trading systems architect positions, to finally a head of front office development position with HSBC, which subsequently took me to Hong Kong in
Mm.
2010.
Cool.
It was, I think, in late 2012 that I discovered Bitcoin. And in 2013, I decided it would play a significant part in the new world of finance. And alongside two others, namely my business partners, Ken Lowe and Hugh Madden, we collectively left our investment banking, compliance, and risk careers behind us to play with magical internet money full time.
Yeah, it
And
was
so
good to see
that's
that. It was good to see that term back in the advertising on the kind of advertising campaign. Hashtag magic internet
in,
money is one of the taglines there.
yeah, I mean, it's a lot of
Hong
fun,
Kong right
right? I
now.
mean, that's what it was coined as, pardon the pun, back then. I think that still some people are still quite fond of using that term because still to a lot of people, the idea of transferring value between two people anywhere in the world without an intermediary, it's still quite magical. Um,
For
so
sure.
we left. I left. So myself and Ken and Hugh, we all left our respective careers in investment banking, compliance, and risk. And our first business was a privately owned, largely self-funded Bitcoin exchange.
Hmm.
It was a pretty interesting period back in 2013, especially given the strategy of most of our competitors was to raise, 10 to 20 million US dollars, and then adopt the Twitter model. That is, attract as many users as possible to your platform, worry about monetization later.
Hmm.
And as a result of this, most of our peers were actually offering all their services for free.
Mm.
So we very quickly had to find ways in which we could provide a point of difference, charge at least some fees to recover our overheads and survive. But ultimately, we did just that. We survived. As for our competitors, some survived, but most did not. From a regulatory perspective, we self-regulated and we operated in a manner of which we believed would be necessary if we were regulated. This was much to the disappointment of the crypto community. We were one of the first venues to implement a KYC and AML policy, which, John, as I'm sure you can appreciate in some ways, that goes against Bitcoin's libertarian roots. We also maintained a dialogue with the relevant regulators and industry bodies in Hong Kong and abroad. as a result of ANX ultimately becoming successful, and by this time having a small but growing team of staff and team members behind us, we ventured into a number of other ventures. One of those most successful subsidiaries was an OTC trading desk that we formed in 2016 called Octagon Strategy. Octagon Strategy very quickly became one of the largest OTC trading desks in the world. And this was largely owing to the fact it was just providing a very professional service to high net worth counterparts, early adopters who were looking to trade in large size of crypto. And it also maintained formal banking arrangements with banks both in Hong Kong and abroad. And that was an achievement that was no easy feat back then. And it was really due to our approach towards compliance and AML that we were afforded such. People look at crypto exchanges and having fiat on-ramps and off-ramps. And now, whilst it's still very much an achievement, doing that, 3-4 years ago, the banking sector really was not at the same level of comfort, if I can use that word, as what they
Sure.
are today. And so for us, banking was one of the main reasons that you could be successful, and to obtain legitimate banking and maintain services that were ultimately settling in the multi-million dollars of payments a day. It was definitely a competitive advantage if you were able to do that. Yeah. It was due, I think that business was extremely successful. And it was towards the end of 2017 that my business partners and I took the opportunity to consider what the future of digital assets or crypto might look like. Having been on a 4-year journey already and having the vantage point of seeing the space mature to where it was then, we ultimately concluded that institutional adoption would materialize at some point. But in order to be part of that new market segment, we needed to adequately prepare for such. And that, again, really wasn't going to be easy, especially given that there was still no applicable regulation in this space. Mm-hmm. So in lieu of regulation, we did what we thought would be the next best thing. My business partners and I, alongside a very strategic investor, we took controlling stake of a listed company on the Hong Kong Stock Exchange, BC Technology Group. And immediately by doing so, whatever businesses we ventured on from there would be subject to the same financial reporting obligations and exchange listing rules as any other listed company would be subjected to. We then created a wholly owned business, namely OSL. And that was a business that would focus 100% on digital assets through its offering of a digital asset prime brokerage, a digital asset exchange, a digital asset custody service, and then finally a software as a service business that would extend all of those technological capabilities I just mentioned to financial intermediaries, wealth managers, brokers, banks, and others. During that same time, we also sought to eliminate all the reasons that had historically prevented institutional adoption. So we appointed a Big Four auditor across the entire group, instilling a trusted level of auditability. As a testament to our own proven technology and our approach to bank grade compliance, we were also afforded Asia's first 100% insurance on our hot wallet infrastructure. And then finally, the real icing on the cake for us, John, was whilst we were undertaking what were, at least for us, monumental tasks, the Securities and Futures Commission in Hong Kong, this is the equivalent of the SEC in the US, came forward with very innovative licensing for the digital asset space, which also actually covered security tokens. And it's these new licenses that are a significant game changer to the entire digital asset space. Put very simply, it's this new regulatory clarity that provides the playbook and the protections for traditional finance and professional investors to enter this space. So I've talked a lot. I'll take a second to breathe and see if any of that was interesting.
For sure. No, you covered a lot of ground there. Maybe let's start kind of at the end of what you're saying. So, and one of the reasons I want to talk to you now is because you've this licensing that you're talking about rolling out, having just rolled out, and OSL being kind of the first recipient of kind of the go-ahead for a couple of these licenses. Can you talk about those two and why they're kind of significant now? And then what it kind of allows you to do on the institutional side, on the security token side, which you mentioned. Maybe talk a little about why you see kind of potential on that front too.
Sure. I mean, the licensing is significant because, firstly, there are pockets of regulation in the wider virtual asset space that have emerged. Some of it is innovative, some of it is probably not fit for purpose. And so whilst we've seen innovative regulation appear in other jurisdictions, it's in our very strong view that this license from the SFC in Hong Kong is undoubtedly the most comprehensive license to date. If you look at what happened with regulation specifically in Hong Kong, the monetary authority stated that Bitcoin wasn't money. The SFC years ago stated that it certainly wasn't a security or future. And the Customs and Excise Department wasn't really interested in regulating it either. And then what happened in 2017 is we had the ICO boom, where this Kickstarter on steroid type technology emerged, and it was fantastic for raising capital. There was no faster way to raise capital than to conduct an ICO. But the reality was it was used by a lot of bad actors, and there was a lot of unregulated securities being afforded to the market. And ultimately, we saw the bubble, we saw it pop, and ultimately a lot of people lost a lot of money. But the interesting thing with ICOs is that the technology worked, and it worked fantastically. And what we saw since then is we've seen people try to take that technology. They're trying to embed it and wrap it around regulation that, in a lot of ways, isn't fit for purpose. And we were fortunate enough to be in a region that identified that security tokens and security token offerings will be a thing of the future. And so the SFC wrote not only very comprehensive regulation for security tokens and virtual assets, but we're subject to the same type of obligations and regulations that someone who is licensed to deal in traditional securities would be. And so this is a very new and innovative licensing regime that covers virtual assets, i.e. like Bitcoin, Ethereum, and other public blockchains, but it also focuses on that security token element. And we've been afforded approval in principle for both type 1 and type 7 activities. Type 1 dealing in securities, and type 7 automated trading services. So providing a digital asset exchange for these type of services. So extremely excited to be afforded the first approval in principle for these licenses. We're very excited that the regulator was innovative enough to regulate not only virtual assets like Bitcoin and Ethereum, but also security tokens. And whilst that narrative of security tokens has been used for quite some time, the dialogue, interactions, and deals that we're frankly securing as a result of this security token play is extremely positive. And whilst some of the participants and banks that we talk to, they're not suggesting for a second that this is going to completely replace their existing capital raising mechanisms like their IPO businesses. But what we are hearing is that they do believe that there is significant advantages to security tokens. That they will offer or complement their existing capital raising businesses through a number of ways and be a lot less frictionless, a lot less overhead, an expanded market that they can offer these security tokens to. And I'll be the first to admit it's going to take time. But one of the major sticking points that was preventing the security token narrative to kick off and thrive was adequate regulation. And for us, we've definitely secured a first mover advantage in Hong Kong through very innovative regulation afforded to us by the Securities and Futures Commission.
Yeah. And there have been kind of rumors about who the first company would be to get this licensing go ahead. Mostly you kind of heard about a couple of maybe mainland China exchanges were kind of in the lead, and then started to hear kind of recently that it was probably going to be all, which was interesting. And I think that kind of speaks to one of the things that's been impressive about your journey is that you kind of made a bet on that regulatory compliance, kind of institutional future focus early on when it wasn't really didn't seem like the easiest move back in 2016, 2017, right? Everyone's going mass market. You have kind of the Binance phase of crypto exchanges popping up and dealing in ICOs and growing large retail bases and whatnot. But you make the kind of decision, hey, we're going to focus on the future of this institutional side and focus on the regulatory side for that. And maybe kind of one of the first case studies for you and seeing how the potential of that would be was rolling out Octagon and the success there. Can you talk a little bit about the process of rolling out Octagon? And we hear about kind of OTC desks out in Asia a lot of it's maybe peer-to-peer, not quite as regulated as we, would imagine it is. Can you talk about how kind of you set up Octagon in the first place and kind of some of your learnings on the regulatory side, institutional side back then?
Yeah,
maybe how
sure.
Yeah.
Sure, John. I mean, Octagon, we're going back to the privately owned businesses that have nothing to do with where we're at now. But Octagon Strategy was really created out of demand. We saw an opportunity to service a market that wasn't adequately being serviced, or at least not adequately being serviced by enough participants in that space. And so again, from a compliance and regulatory perspective, there was no regulation back then that was suitable. And so for us, it was really obtaining the trust from our banking partners that would allow us to operate a business at scale. If you are dealing in, back then, multi-million-dollar transactions and needing to settle very quickly, if you do not have reliable banking partners that provide you a relationship, fully well knowing that what you're engaging in, i.e., you're in the crypto space, quite put frankly, you don't have a business. The crypto to crypto model back then wasn't particularly huge as it is today. And so for us, it was seeing an opportunity and seizing that. But I guess, if I was to relay some similarities as to what guided us to here, it was being able to work in a market that just was desperate for professionals to work in this space, to provide trading service agreements that underlined and was very descriptive as to how the process works, what happens when something goes wrong, who is liable and accountable when things go wrong. And back then it wasn't really something that was seen. And so that was starting to pave the way. And it was sort of starting to paint that picture in our minds that institutional adoption was going to materialize. We were starting to see the very starts of that activity back in the privately owned business days. And it was really starting to plant, the seeds as to what ultimately decided us to start a completely unaffiliated venture and taking controlling stake of BC Technology Group and ultimately creating, OSL and starting businesses from a whole. I think that what I can say about OSL and how that business has really changed. I mean, if you look at the product offering that OSL affords, the first business unit is our prime brokerage. And this business provides the same services that you'd expect from a traditional prime brokerage, however, unsurprisingly in digital assets. And so the prime brokerage affords, over-the-counter block trade services still, in terms of that category of service. It provides electronic trading through a request for quote style mechanism. Some parts of our business provide OTC options and derivatives, swaps, borrowing and lending services. And so it's, as I said, it's very much a prime brokerage offering that you'd expect from Morgan Stanley. And we fully anticipate that for professional accredited investors, traditional licensed financial intermediaries, it's that type of service that they will demand and insist on, in addition to a slew of other services such as exchange and custody and whatnot. So it's interesting how quickly this space has changed, despite it being at least 7 years for me and my business partners. It has changed quite dramatically. And you are right. When we moved from the privately owned businesses into this new and unaffiliated group, we really have we have foregone retail revenues to focus on this longer term strategy of preparing ourselves for regulatory adoption, institutional participation, and just the overall growth of this market. And so you are right. We had a decision to make, was whether or not do we focus on retail, where you and I both know that this market is and has been historically dominated by retail, or do we position ourselves to this next wave of adoption, this changing of the guard, and being very well positioned for that to happen. And frankly, super excited for what the future holds.
For sure. And that taking over BC Group and being public listed was kind of the burn the boats moment, if you will, for that kind of move. Can you the decision making for that process and kind of the additional scrutiny that goes with that? You had been the second, or maybe the first group in Asia, maybe second in the world to have insurance for your custody product, maybe around that time before that, or did that happen after the public listing?
It happened after. Yeah.
After the public listing. So you're taking on all of this additional kind of scrutiny.
Yeah.
What can you talk about the kind of process of also kind of scaling up a team that needs to be more professional in that sense? So I was looking at your website, not long ago, and just was seeing all these names and backgrounds of people that I hadn't seen before. So it's been interesting to see kind of the growth of your management team and kind of the professionalization of it. Can you talk about the process of yourself hiring that team and building that out? Yeah, seems like a
most
big endeavor.
John. And indeed, and it's also it's been interesting or fascinating to watch what's happened over the space of 7 or 8 years. If we were trying to get peers from our previous investment banks come work with us, it was way too much of a risk. They were like, what are you doing? There's absolutely no way I'm leaving a respected investment banking career to come and work with you guys. But what has happened as this asset class becomes recognized, as regulation takes place, and as we're starting to see financial household brands start to stake their claim in this space, the sector becomes more sexy. The sector starts to become, this is actually pretty cool. And it's all those stepping stones that has allowed us to actually have the strongest management team that we've ever had. Every member of OSL's management maintains significant experience in traditional licensed financial or legal household brands. And whilst this reinforces the DNA of OSL, it's also a very telling sign of just how quickly this industry as a whole is maturing. In a few years ago, it was reasonably difficult to attract talent, and nowadays, it's a very different story as we see many executives and talented individuals moving into this new and recognized asset class. We have a graduate training program, and it's interesting to see who else they've applied for. And there might be some investment banks, but their number one is to join OSL. It's that digital asset exposure that they're looking for. And it's quite ironic. I don't think investment banks are going away. I definitely think that they play a respected part in this ecosystem. But that being said, it is very much changed, and it's maturing very quickly. And for us, super proud of the team we have here. We have an absolutely dedicated team that span across 24-hour time zones and whatnot. And it's been one of the most rewarding aspects of this position is to have built a company from 3 individuals to now, I think, 140 employees spanning different time zones, and having a super dedicated and committed team. It's been a fantastic journey.
Yeah, and when you say that, in the past, people may have kind of looked at you side-eyed and said, "Wow, this is too risky." I mean, that was the case. So you started out in 2013, and kind of a lot of your peers, probably 90% of them, to your point, are no longer operating. But y'all kind of were able to, bust your butts and work your way through some bear markets, and now you're kind of in this position, which is cool to see. And then, so kind of now, as you've seen that kind of influx of institutional kind of talent wanting to join out the space, have you seen kind of on the kind of funds coming inside? What are you seeing kind of trend-wise there? Maybe in the past, when we talked about kind of institutional money, it was more crypto hedge funds and things like that. What are you seeing from kind of mainstream institutions in terms of interest and kind of volumes to you?
Yeah, I mean, for us, I think institutions represented nearly 80%. I think it's 78% of our digital asset trading volume for OSL in the first half of 2020. Our interims were published in August, and the first half of 2020 was a period of exceptional growth for us. The digital asset revenues are up 47% year on year, and digital asset trading volumes are up 420% year on year. Your viewers may also find it interesting that over the past 6 quarters, we've seen consistent consecutive increases in our digital asset trading volume. So we're breaking records and increasing that level of trading volume every quarter. And we're seeing we are also seeing significant increase in the number of counterparts we're onboarding, especially from a corporate and institutional perspective. And we're also seeing the number of active clients that are trading also increase. But to get back to your question with respect to who are we seeing that would fit into that sort of traditional finance or that professional accredited investor or that institutional type demographic, it does vary. we certainly service a number of regulated funds. A little bit different to the old days in 2017, where every man and his dog was offering a fund and a basket of all these latest ICOs. Fortunately, we're not yet seeing that with DeFi, which is a good thing. It's still too technical, so no one's grandma is getting hurt in the process, which is very refreshing for us. But we do, as a result of having a custody service that is audited by Big Four and insured and providing the type of bank grade controls we do, we certainly do service a number of regulated funds, and they do play a part in the makeup of our demographic. We still also do service, professional accredited investors who, trade significantly on a short-term, day-to-day basis. But probably most interesting for the viewers today is just the dialogue and the interactions that we're having with traditional finance. Contrary to popular belief, a lot of these external public-facing messages from these banks is, we're not getting involved in digital assets. Without naming names or revealing anything that I can't, I can assure you that behind the scenes, a lot of the banks are scrambling, and some of them are making terrific progress. I mean, we've seen, State Street, Nomura, Standard Chartered, Fidelity Digital Assets, even JP Morgan is providing banking services to the two largest regulated exchanges in the US. I mean, the times are changing, and I think with the increasing amount of regulatory clarity that the world is seeing, combined with the political, economic uncertainty and the unprecedented phase of what the world is going through with COVID, Bitcoin and digital assets aren't that crazy anymore. And it's also been spurred on by other involvement or new entrants coming into this space. Back in the day, digital assets were really referred to as electronic documents, images, MP3s, and electronic videos. And then with the birth of Bitcoin, we saw this digital assets term encompass cryptocurrency. And now, with the emergence of central bank digital currencies, like the DCEP initiative in China that's being production trialed, like the asset-backed tokens and stable coins and payment initiatives such as Libra with Facebook, and with security tokens, the ability to tokenize a traditional security in a digital format, that term digital assets is getting significantly larger. And so there's not that, there isn't that real taboo that Bitcoin had, at least from when I started to get involved in it in 2012 and 2013, where anyone who wasn't accustomed in any shape or form thought that you were either a drug dealer or doing very malicious things by even mentioning the word Bitcoin. Nowadays, you can have a very mature discussion with pretty much anybody in your network, whether they're accustomed with Bitcoin or not. And if you were to tell them that Bitcoin does form a reasonable component of your portfolio, you're no longer considered crazy. It's more so that makes sense. The world's a pretty crazy place right now. And I think and that's where I think Bitcoin and other digital assets like Ethereum and whatnot are really going to shine. I think, obviously Bitcoin is subject to extreme volatility. That's nothing new. Bitcoin is starting to get further global adoption from a regulatory perspective. We're seeing institutional adoption. We saw the NASDAQ listed company MicroStrategy purchased $250 billion worth of Bitcoin as one of their treasury reserves exercises. I think
about getting more.
Not even
yesterday.
Oh, really? There you go. It's not even I think. That is something that's going to become the norm. That is something that's going to become much more mainstream. And with a rising population of individuals that are born digital, this is actually no longer going to be something that is shied away from. It's going to be embraced. And fortunately, I think everyone that's viewing our podcast today, I think we're in a very, very fortunate position to be alive, because I think it's going to play a significant part of what comes next.
For sure. And you talk about kind of some of the ways that Bitcoin is viewed back in, say, 2013, and maybe some of the things that got you interested in being and starting a business in the industry, were some of the potential of where it could go. And now we've seen it really get to kind of a point of, acceptance and, faster than maybe we even thought it could. What else are you kind of thinking about, or how has the way that you think about Bitcoin changed over the past 7 years? And you're talking about it now as companies are starting to put it on their balance sheets as, hey, this is something that's worth investing in because of the macro environment. How has the way that you think about Bitcoin changed as the macro environment shifted over the past 7 years, and as you've seen kind of the industry institutionalize, I guess? Any other thoughts on that?
Yeah, I think for me, John, I probably already discussed that point with the fact that you can actually have a conversation with anybody now, and they know what it is. They also are aware that it's going to play a part in the new world of finance. They're largely aware that there is regulation being formed around this space. And I think, it's coming very thick and fast. And I think that that's an exciting phase of never going back, probably wraps it up as a whole. I'm super bullish on Bitcoin. I'm super bullish on other aspects of digital adoption as a whole. And, Bitcoin just survived the largest financial crisis in its 11-year existence. And it did that without any circuit breakers, without any government or regulator intervention, no quantitative easing, and without any economic stimulus to help support its recovery or longevity of the underlying network. And again, Bitcoin just does what it does. It chalks this up as another test defeated, and it adds such a feat to its many battle-hardened scars. And I think the other interesting phase that has accelerated that, I won't say adoption, I'll probably say acceptance, is just the unprecedented amount of quantitative easing that's happening right now. And people just starting to become much more educated on the way that traditional finance works. I'll certainly be the first to admit that until I'd started working for investment banks and I'd seen, I was working with Bear Stearns when it collapsed. I was working for Barclays when they were through the LIBOR fixing scandal, and I was working for other banks during other activities that weren't particularly things to be proud of. I'll still admit I didn't. The fastest and most eye-opening way for me to become more educated with the continual failures of the traditional financial system was actually getting involved in Bitcoin. And I don't think that's unique to me. I do think that a lot of people, when they start to uncover what is Bitcoin, they start to peel the layers away. It's really like, oh, I now understand fractional reserve banking. I understand why the failures have occurred. And by no means am I as, I don't want to use the word radical. By no means am I as, I wouldn't even call myself a libertarian, but, I do respect and appreciate the libertarian roots of something like Bitcoin. I do appreciate both the advantages but also the risks of change with decentralized technologies, even outside of Bitcoin. I think decentralized technologies and other things that don't have this central intermediary control is going to play a significant part, not only just with Bitcoin and finance, but people and what they expect and who maintains this control, transparent voting, all these different fundamental elements of our lives that have always fallen foul of central intermediary control. And as I said, like it, love it or loathe it, things are changing with technology. Things are happening really fast, but we're also fortunate to live in an era of time where you do have innovative regulators that have acknowledged the fact that the world is changing, that decentralized technologies aren't going away. You still do have regulators in some jurisdictions completely trying to still ban decentralized technologies like Bitcoin. They will fail at doing that, and it'll only make it harder for themselves. And so for some of us in this space, we're fortunate to work with innovative traditional financial intermediaries. We're fortunate enough to work with innovative regulators. In some places in the world, we're not that fortunate. But I think over time, this place and the future in general is actually looking very bright and very exciting.
Oh, all well said. And then, you've spoken highly of Hong Kong's approach to regulation in this space. Geographically, where else you're operating? I know you all have a large presence in Singapore. Can you speak at all to how other regions in Asia, places you're operating, are handling or approaching regulation?
Sure, John. So as you mentioned, we do have offices in Singapore. We have been grandfathered under the new Payment Services Act, which covers digital token payments, which is governed by or afforded and regulated by the Monetary Authority of Singapore. And there are differences in the licenses, obviously, as you review them globally. You know, for us, the bar was set so comprehensively high in Hong Kong that really any regulation or any license that we would want to go forward globally to apply for, we think that there'll be a lot of that heavy lifting that we can lift and shift and apply to others. So it's fortunate that we've undertaken that route. From a perspective of Huda's OSL service, we whilst we're headquartered in Hong Kong and we do have offices in Singapore, we also do have a presence in the Americas region, and we're also starting presence in London. So we are a global company. We operate 24 hours a day, 7 days a week, with the ability to settle 24 hours a day, 7 days a week, which is quite a unique capability. So for us, we are a global firm. We operate in the regions that we're allowed to. There are certain regions in the world that do require a specific license to target some demographics in those regions, of which we are fully appreciative of and do not enter. But for us, the home market in Hong Kong is the big win. But we continue to look at other regions where there is an opportunity to expand and grow, and using that unique software as a service capability where we can extend our technological capabilities potentially through a partnership in other regions. We will continue our strategy of, dominating markets where we have a right to win, and strategically partnering with others in markets that we frankly don't.
Yeah, makes sense. And you talk about some of that, expansion, some of the competitive aspect of operating globally. When you think about kind of the competitive landscape of, you'll play in a lot of different fields on the technology side, on the, prime brokerage services, those things. How are you thinking about kind of your competition? You're talking to a lot of more, institutional players who are kind of, maybe starting to dip their feet in internally, building out things for this. Do you think about kind of legacy institutions as your next kind of level of competition? Or are you thinking about them more as partners? Obviously, it depends on who you're talking to, but how do you think about kind of the future of the landscape there?
Yeah, I mean, entering into and offering digital assets, I mean, it comes with an enormous amount of challenges given just how new this space is. And if we're looking at traditional financial intermediaries, they're acknowledging the fact that the asset class is here to stay. It's very quickly being regulated, and there's an enormous opportunity. That being said, it is difficult for a very large bank or financial institution to upskill, acquire potentially, and provide the necessary technical capabilities and processes to be able to offer crypto, for lack of a better word, in a safe, regulated, compliant manner. And so for us, we've done all the heavy lifting. And so when you talk about some of the competition, I mean, we have a number of traditional financial household brands that have entered into the custody space. That's great. I love it. It's fantastic. I think that they're doing a fantastic job. Have we seen anyone enter this space and provide direct access to Bitcoin for their millions of customers? No, we haven't. And I am very confident that that's going to take place. And so when we talk about legacy financial institutions and competition, not really used in the same sentence. For us, we see that as our client base. Right. We afford them the tools to undertake and use proven technology in a platform that meets all of the regulatory obligations, meets their compliance approval, and frankly, really meets their material outsourcing arrangements. So you do have other people in this space that are providing software as a service capabilities. Are they mainboard listed? No. Are they Big Four audited? No. And it's positioning our firm to be able to counter, onboard, and interact with traditional household financial banks, brokers, wealth managers, and family offices. That provides us very much a competitive edge. And it's taken a long time for us to build, but now it's live, it's in production, and we're very excited to potentially make some very big announcements before year end.
Yeah, so sounds like a great position to set yourself up to be in. A lot of work that went into it. Publicly listed aspect, the insured aspects, Big Four audited aspect. Maybe the only company that sits in those three buckets in the digital asset space.
Correct.
Yeah. So all good to hear you discuss and kind of hear the vision for how it's going to play out. All cool. Any other kind of predictions on the Bitcoin side? More kind of next 12 months. What do you think? What want to make any bold predictions on where we sit with Bitcoin? And
I've been burnt a couple of times. I correctly predicted that Bitcoin would hit 10,000 when at the time I think it was around 3,000. I went live on Bloomberg television and made that prediction, and somehow I managed to pull it off. Probably more through luck than technical or fundamental understanding of what was really going on. I subsequently also made a very wrong prediction. I think 6 months later on CNBC, Squawk Talk, if I can remember correctly. And so I tend to shy away from making price predictions. What I will say is that I remain super bullish on Bitcoin, Ethereum, and other digital assets. I do think that Bitcoin is doing what it's doing. I also do think that this entire ecosystem is going to grow as a result of what I said before, this digital assets ecosystem expanding and becoming wider than what it's been for the past few years, just being cryptocurrency. With the introduction of the central bank digital currencies, with the asset-backed coins like Libra, and with security tokens as a whole, I think it's not a very exciting prediction for me to say you're going to have $1 trillion asset class in the next 12 months. I'm absolutely certain of that. But I mean, that's not a very bold prediction given the basket of everything I've just thrown in there. But what I will say is, with the introduction of central bank digital currencies and with initiatives like Libra specifically, that's going to accelerate the adoption of crypto or digital assets by a decade. It just will. It will change consumer behavior and their perception of using something as a payment rail or a settlement mechanism that isn't in their native domestic currency. And it's also digital. And so, there's been a number of massive behavioral shifts in consumer behavior over time. I mean, we used to pay in gold, and then we went to paper notes, then we went to plastic cards. And then we sort of have gone digital with mobile payments to a degree. In China, it accounts for 80% of all payments. So they've definitely done it there. We had contactless payments, that was, for some people, had never used contactless payments, but then COVID forced that upon them because they didn't want to touch what is called dirty cash. And I personally am a very strong believer, and I can state with conviction, that we're going to see consumer behavior change as a result of central bank digital currencies, as a result of this Libra initiative, and with the result of asset-backed stablecoins and whatnot. It's, as I said, it will just change consumer behavior from going from, hey, I live in Hong Kong, therefore I have to spend in Hong Kong dollars, to, okay, well, this is something that I accept as currency. Money is a belief system, and whether what your views are on Facebook is irrelevant when 30% of the world's population use Facebook, WhatsApp, Oculus, or Instagram at least once per month. The reality is you're probably going to accept currency that comes in the form of that, because everyone in your social network uses it. And to be honest, that experience of paying someone for dinner through WhatsApp, unfortunately, is going to trump anything that we have with Bitcoin today. But what that will do is it will gradually, but with very fast momentum, change that consumer behavior. So when someone does say, hey, I'll pay you in Bitcoin, okay, well, that's an asset that's supported by my wallet. I already have that supported by my wallet, therefore, sure, I'll take it. And then it just starts to slowly move us and accelerate that immensely fast than what it has so far. When you try to pay someone in Bitcoin today, well, what is it? How does it work? How do I lose it? I've heard all these bad things about the media. I need a wallet that supports it. A lot of that goes away when all of a sudden they're looking at their Libra wallet, or the Calibra wallet rather, or they're looking at their interface that supports central bank digital currencies, and it just so happens that Bitcoin's there. I think that's probably something I'm very excited about in the future. A lot of people, I'm sure you heard as well, John, when Libra was announced, it was like, oh, this is the Facebook killer. For me, I was excited. I was delighted because I knew it would accelerate the consumer behavior needed to accelerate the adoption of digital assets.
Yeah, and great point on the consumer behavior aspect. And then you have companies like Square, digital wallet companies, Cash App,
100%,
Bitcoin first in terms of how they're approaching us. So super bullish for those things.
Indeed.
And then to close out, a recommendation. So you're out of Hong Kong now. Can be a book, museum, food, place to see. Give us a recommendation for folks who are maybe going to be in Hong Kong at some point.
I mean, there's so many favorites in Hong Kong. Hong Kong is by far my favorite city in the world.
And you've lived in Brisbane.
Yeah, that's quite good. I've been here 10 years. I don't have any thought of leaving anytime soon. In terms of recommendations, my go-to when I have visitors arrive and they want to try traditional food, I mean, there's so many different places that I could recommend, but one of the favorites is a place called Underbridge Spicy Crab.
Underbridge Spicy Crab.
An Underbridge Spicy Crab. It does a great fried crab. You will be prepared to make a mess and end up with half of it down your shirt. It comes washed down with very, very cold, very cheap beer. But it's always an experience. And anyone that is watching and wants to visit Hong Kong, by all means, hit me up, and I'll be more than happy and delighted to take you with me.
All right, I'm going to take that one to heart too. I haven't been to
100%. The offer's there.
What? And then how can people kind of follow you? Follow OSL?
Sure, that's a very good question, and it's one I always negate to mention. For OSL, it's pretty easy. It's osl.com. We're fortunate to secure a 3-letter domain, indeed. For our Twitter handles, they're all pretty much osl.com or applicable nature, but they're all available from osl.com webpage. For myself, my Twitter handle is very, very not creative. It's I am Dave Chapman. And I'm not particularly as frequent tweeter as I might should be, but you can definitely always find me there at some point.
For sure, I like the I am. That's a little bit unique. And whenever you do choose to say something, it's worth taking a look at. So it's nice to have those accounts that don't clog up your feed all the time, but then say nuggets of good stuff every once in a while.
That's very kind of you to say, John. Thank you.
All right. Well, great talking, Dave. Good to catch up and hear how everything's progressing. So it's all fun to hear.
Thank you very much. And thanks for all your viewers. And thanks for having me on the show. Really appreciate it.
For sure.